What's up, everyone? Today's Friday. Market just closed, and damn, this week was crazy. All this Powell shit and all these COVID news that have been coming out. The market had just closed, and I want to show you guys some tricks or something. Not even tricks, just patterns that I use on the daily. This program that I'm using is called TradingView. That's my daily, what I use every day to chart every morning. But I wanted to show you guys some chart patterns that I use every single day when I'm trading. And a lot of people get confused whether I look for it on the 1 minute, 15 minute, 30 minute. You guys can see here, this is the AMD, has the ticker in the background, the logo, so watermark. 15-minute time frame. Every time I'll change it, it'll say 1 hour, 4 hour, 15 minute, or anything I use 1 minute daily, just so you guys can see that. So you guys won't be thinking like, oh, I'm switching and showing different time frames. But I wanted to show you guys how could you use these patterns in your daily trades, especially for every day. It's a basic pattern. It's just you guys got to remember how to use them all. We're gonna start off right now with just watching the chart with no tickers. No indicators, which is a way better visual. That's what I see. I'm able to see everything better with a visual. Oh, what the fuck, man? I'm over here studying. You're able to see visually everything with no indicators in your charts. All right, so let's start off. As you guys can see here, these are more complicated patterns, but this is a double top, right? You guys don't know these. I'm gonna show you guys a picture right now that I have. Okay, there you go. I'm gonna show you guys how all these patterns come up here. First off, there's a wedge right here. It's not a falling wedge, or you could call it a falling wedge if you want, but mostly it's a pennant, a bullish pennant. This side on the daily. We're gonna start off on the daily, just so you guys can find the more easier patterns. The daily. So I'm gonna start checking out pattern. Follow the levels. There you go. So I guess, yeah, you could call it a falling wedge. I forget the name. I really don't know them. I just look at them and I'm able to see them. Falling wedge or a pennant. Pennant just seems to get tired. The thing is that pennants, the difference from pennants is that they have more touches up and down, a lot more touches. This just has a basic pattern, which is almost the same thing. Because if you guys notice, oh bad, I was about to burp. If you guys notice, right now these patterns are as soon as they reach the top, they come back down, up, retouch again, down, up, down, and out. Right. Let's change this to white. Another color, let me see. Yellow. Alright, yellow. This is the daily chart, remember. This is a daily chart. We're looking at the daily. I'm going to show you guys a little trick that I know. So this is what happened. The pattern broke out. It formed its pattern starting from here. You got the top where the wick is at. Kept following wicks and it kept rejecting every time it hit the wick. Right? It's bouncing off. Rejection, came back. Bounce, came back to rejection, bounce, rejection, just keeps going up and down. Also, this is called a bull flag or a pennant. Like I said, more of a bull flag. Why? Because you can see the pole here from where the trend started all the way to the bottom, which is right about here, right? The 84.25. I'll put a horizontal line just so you guys can see it. And there's a flag right there or pennant. So falling wedge, flag, bull flag, rectangle, same thing. Bull flag. You don't have to get really complicated. Just as long as you're able to see it and you know it's a continuation going to the bullish side, which is upside, right? Bullish continuation. Let's check it out. So here's a trick that I learned while doing all these. When you do a pattern, let's say a bull flag, if you get the end of the flagpole, the measured end of the flagpole all the way to the breakout, it'll allow you to see where it's gonna go, right? There's one right on top of this wick. Okay, you could do one of those or you could put it there. The point is that it'll measure it and it'll show you, okay, this is what it's gonna do, this is where we're gonna go. We found two levels where it might reach as a target, potential target. It doesn't mean it's gonna get there. And look, that's just getting the measurement. Like I said, the measurement from the ending all the way to the, you can add this to the inside where it's breaking out, or to the ending where it broke out. And you can see how it is rejecting these levels right on the dot. These levels even works for the past areas. Look, there's a wick there, came to retouch, make your own level, rectangle. Look, it worked as a demand zone, resistance. That's a little trick you guys could know just using the patterns. You could do those in any patterns. Let's find another one. There's a lot of those like that. Rising wedge also. Let's see, let's delete this one. And okay, so you saw the trick. This is the other thing. This is crazy, bro. Look, this is crazy. See this? Like how I was saying, there's always gonna be a pattern within a pattern. That's where people get fucking confused. It's not complicated, okay? You guys don't see like, okay, all I see is this, I'm trying to make up. You're gonna start doing stupid shit and start making up crap, right? You're gonna start making shit up like, oh, this is this, that, this is this, that. This is a square or something. This is a consolidation zone. Why? Because it's bouncing up, down, up, down, up, down, up, down. That's one other pattern, consolidation area. Or also it could be a bullish rectangle. Yeah, maybe not because it doesn't have a flagpole, but they call it bullish rectangle, but it's a bull flag. Also, you could do the same trick here. When you see consolidation levels like this stock is going to take a really long time to get out of whatever position it's in. Look what happened as soon as AMD broke out of the level of 58.50. It just ended up sending it crazy, like $60 up. A lot of people missed this move, but you could also check the same way I said, measure the inside of your pattern and get the ending, and it'll show you where it might go, right? So let's check. It rejected right there, right? I still missed a little bit, but it's not even that. All right, more. So you won't think I'm fucking retarded. There you go. Pennant. Alright, if you guys saw a bull flag, fuck it, let's say you guys saw a bull flag, you see the flag. Alright, there you go. There's your rectangle, bullish rectangle, which is way better. I saw consolidation area, but I guess it's the same thing as a bull flag because it did drop and then it became a flagpole, all crooked, but it's there. So now let's add it to the end. It took us right to this section. You add it to the top and look what happens. Right to this section. Those are just targets that obviously is not gonna happen, but look what happened. At the end of the day, it did end up reaching one of that rectangle pennant, right? The bull flag or the bullish rectangle. It got all the way to the low, which is a way better level. Either way, if you did it the wrong way, look what happened. It's just literally just stopped right there in that target, exactly where we thought it was gonna hit, or we assumed, because where we measured the inside of the level or pattern all the way to the top, which is this 68. That could have been your target. Fine, there you go, that's your target. Doesn't matter if you would have gotten out there, since you know it's gonna break out. And your entry obviously is on top, exactly how it shows here. You gotta get your entry on top of the breakout. You have to wait. Your stop loss is below. Above it is your breakout. So right there, you would have entered. As soon as it broke out, you would have had a chance of giving made a wick for you the next day. As soon as it broke out, it made a little wick right here just for you guys. Right there, look, perfect, right here. Made it. What would have happened? You would have gotten in this day, the 23rd, and the next day you would have woken up. Sure, fuck, probably like 1,000% of your whole contract. If you're playing contracts, you go long, obviously. But look, that whole day went. The next day came back up and touched your wick. Below it, it could have gone to shit, but it ended up popping up again on another day. But again, look, this happened because of earnings. It could have came back and filled the gap. But we're talking about patterns today. Alright, so that's one of them. Another pattern on the daily, it's this one right here. Another falling wedge. Oh shit, another falling wedge right there. Squeezing out. Happen. Came back up. As soon as it broke out, like it says here, entry. An entry level. Where's it at? Where's it at? Where's it at? Right there. Entry level falling wedge was right on top. Right there. Entry level would have been there. That's a big ass fucking arrow. Entry level here. Broke out. We would have gotten in. Let me change the color. Right there. Your entry would have been right here. Exit. Stop. We're going to enter again. But this is obviously like a retouch. It came back to retouch or level there. So that's where little people get more scared. But that's why you have to give your stop loss. You would have chased it here. Yeah, you have it. But you have a percentage. It's up to you. You want to get out or not. Depending on your stop loss, you will get out. A lot of people, me, I would have averaged down here. And see what would have happened. Worst case scenario, you come back down here and you just get the fuck out. You know, you lose 10%, 20% of your swing. Or day trade. Just look at how it is. This is the daily. It's more easier to find on the daily. That's I'm putting the daily. Alright, so now same thing. You could do the same exact thing. What happened here? The inside of the level, graph up and down from the center. Put it either side here. Top. Look right there. Perfect. We just measured that level. So that's the whole trick that a lot of people never use. I think it's better using it at the ending. That's what I've noticed now. I think I've been using it wrong the whole time too. I'm barely noticing something new too. Boy, look, see, pattern after pattern. Flag, falling wedge, up again. So it's a continuation pattern. If you notice, bullish, 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 bullish. Why is it bullish? Because it's making a higher low, higher low, higher low, higher low. Consolidation, still going up. AMD is currently still going up. It's been in an uptrend forever. Forever. Try to fake out right here. It came back inside. Those are problems that we had here on May. I think that was the election. But there you go. Still going. This could come back down maybe. Who knows how far. Come back here. Worst case scenario. And then come back up. Still on an uptrend. This is actually a dip. This will be the best dip ever. Okay, so we were talking about patterns. So this is the pattern, like I showed you. We were there. We were right here. The falling wedge on the daily. You would have gotten a bigger chance to get in. Consolidation, bull flag. Alright. Another wedge right here. Okay. This is the tricky part. Now, how the hell do I use it on the 3-minute, 5-minute? You're looking at the bigger time frame. Okay, you see this shit going up and down, up and down. This is called a choppy zone because you'll get faked out here. People are gonna think, oh, it's gonna break out, it's gonna break out. But that's a daily. Check the 4-hour. Let's see. So the trick here is that there's always a pattern within a pattern. Look, we check the 4-hour. Look how it perfectly fits. It's fitting perfectly, alright? We're using this one. Okay, whatever. Let's use another one. Fine, let's find another one. More recent level. There's a head and shoulders. A double top, my bad. Sitting 2 tops here. But how much does this? Hits, hit again. Head and yeah, hit it once, hit it twice. But let's do one here. Look. Pattern within a pattern. We're gonna find that one out right now. Another pattern here. See, you just gotta get used to finding all of it. Another one here. Right. It's all these. They're all here. Bullish, bullish, bullish. Another one here. A 4 hour. Now look at this. This is it looks exactly like how it looked the flag, right? This one bigger, but we'll talk about this later on. But let's see, this is where exactly we're at today. It's Friday, January 7th, 2022. Okay, this is the other trick. Like I said, 4 hour. We're on the 4 hour. What do we see here? We're gonna start finding patterns within a pattern. So let's go back here to the 4 hour. What the fuck do we find inside? There's a big ass. Let me fix it. I don't want nobody talking shit. Let's fix it. Perfect. Yeah, wig or wig. Candle, candle. Okay, touches. Okay, let's make it perfect. I know there's some perfectionists out there. Pattern within a pattern. What do you see here? Pattern. What do you see here? Pattern. Saw that? You want to go in bullish? There you go. Want to go in bearish? Fuck it. Let's delete these lines. Let's see, these never came out here. Right? You could wait. Let's say you see them now. Yeah, you're seeing them now. But let's delete this. Okay, now what? Pattern. Bearish pattern. It's a bearish pattern. Where the fuck is it at? Rising wedge. Bearish pattern. It's going up. Broke down here. That would have been your entry. Boom. Came down. Look, it consolidated here. You could have waited, but broke down. The rising wedge held for through 3 days. Consolidation. Came back down. Same thing here. Another one. See, you just have to wait. Patience, patience, patience. Another one there. Broke down, came back down. You have your level. You have to have your levels. So you have so many patterns within a pattern. Right there. A brawling wedge, I guess. Yeah, brawling wedge. See, you just have pattern and pattern and pattern and pattern and pattern. You have to get used to some. Same thing. You go a pattern within a pattern. You're playing the 4 hour. Go to the 5 minute. Right, day traders. There you go. You're going in the pattern. Look at all these fucking little levels right here. Look at this whole consolidation area that we saw. Even on the 5 minute, that little level, this level that we found right there. Let's fix it again. Perfectionist, like I said. We find levels over levels. Another one here. You wait. You're following it. You're following it. You're waiting for your time. Get in here. You would have gotten money. You would have never gotten lost money here because of your reward ratio. Since you're going short. Look. You would have been green the whole fucking time. Green. You would have held overnight. Swing this shit. This yellow bar right here. It's pre-market. Pre-market, it bounced up. Oh, there you go. Look. This is a pattern that I saw for this day. Even if I didn't know what's happening in the future, I would have seen this. It breaks above here. We're gonna fucking go crazy. Right there, right? Let's put a horizontal line here just to make sure to see what it does. Look, broke out this level. 5 minute. Sent $127, $28. That's a $5 move. You got from the bottom. That's another different type of thing. But if you would have charted this, you would have caught it from the bottom at a bounce level at 121 all the way to 128. But since you're barely beginning, you still would have caught. Yeah, you want to catch more of the profit, but who gives a shit? The point is that you're getting ready for it to buy. As soon as it crosses this line, you're ready for it to get in for entry. It's a call. Also, what is your exit? Your exit is gonna be the end of your pattern, which is right here where you fucking started. Look, it's gonna match. It's gonna match. Look, that would have been your exit. Entry here, exit the end of the pattern. All right, let's see. Inside of here, right there. Like we said, we're gonna put it at the end, right? Because that's something new we learned. And look, right at the fucking, it's matching. So tricks to learn how to do patterns. Look at that. Pattern over pattern. This happened. Went to shit. Let it bounce. Let it do its thing. Okay, came back up to resistance, to our support. It broke resistance. That was our support before. We find another level at the 5 minute. There you go. That's what we would have entered. You would have lost here. You would have entered, and look, you would have had all this green. Same fucking shit. Let's get the inside and put it at the end. Let's get a wick that. Let's say it's doing that. Look what happened. As soon as it touched, you could have gotten off, and look, it did a bounce right there. Inside of the pattern, put it at the end. It bounced right at the fucking level. Look, and now you could use that as a support and a resistance for the next day. As soon as it broke down, it bounced up. Look, you would have held. You would have probably made more money, but who cares? You already. That's the whole point, that you're trying to make profit. Trying to be profitable. Same thing here. 5 minutes. This is in the 5 minutes, you're gonna find a shitload of patterns. Shitload of fucking patterns. Look, another one there. This one fell down. Let's fucking wait. Another one here. Broke out. Didn't reach a top of resistance. Didn't break out. If it would have broken out, it would have gone up all the way here. Fine. Let's delete those lines. Okay, you don't find nothing. You barely woke up. You woke up all late. You don't know what the fuck the market is doing. You wait. Find a pattern. Maybe in the 5 minute, 10 minute, whatever is. Look, you find all this. You're finding all this. What happened? Broke out the next day, right in the morning. It's gonna happen. Take the inside, outside. Boom. It was about to hit it, but somehow, look what happened at the end of the fucking day when it touched our. That's a level from next. Look, it's matching. It's matching. This is not even. I'm going from back in time all the way to the front. Levels, levels, levels. Consolidation, level, bull flag.